Okay. Question number 6. Archana and Prerna are partners sharing profits and losses in the ratio of 2:1. Very important. Later on, when we have net profit, we are going to use this ratio. With the help of the following trial balance and adjustments given below, you are required to prepare the trading and profit and loss account for the year ended 31st March 19 and a balance sheet as on that date. Trial balance given to you already, they have separated the debit balance and the credit balances. So let's continue. The first item on the debit balance side, stock on the first day of the year, opening stock, where will you write?
Trading account.
Okay. The answers that you already know, very quickly you give them out. The next is patents.
Asset.
Asset.
Okay. So some of you have told me it is an asset. But can you tell me what are patents? Anybody? If you know it, please answer. What are patents?
License.
Not exactly license, but on the similar lines. Yes, can you try? Anybody else?
Like when someone has a item or an idea which is made by them, which they have found out and all, and then they want other people to be able to use them, so they give out patents for them. Like they have the right to use this, but the owner of that idea remains the person who is showing the patent.
Very good. Very good. You're absolutely right. Let's say I have come up with an idea, okay, of building a certain item. For example, let's just take a mobile phone, and only I know how to make that with those particular specifications. So what I do is, since nobody else should copy my idea, I go and get it patented. That is the meaning of the word patent. So what that authority does is it gives you a patent, and there is a certificate stating that this idea belongs to so and so person, and nobody else can copy that idea. If somebody else copies that idea, it will be illegal. So that certificate is known as a patent, where the idea is originally yours and nobody can use that idea without your permission. That is known as a patent. Why it is an asset? See, the moment you have a specific idea, you are going to get the benefit for it for the future years by producing that particular item. And the moment benefit is going to be received for a long period of time, it is classified as an asset. So patent is an asset. Very good. Let's continue. The next item, debtors.
Assets.
Assets.
Okay. The next, stock of stationery. Anybody can try stock of stationery? It is an asset. Okay. Printing and stationery by itself is an expense, which goes to profit and loss account. But when you see the word stock of stationery, the meaning of stock is you have bought items in bulk and kept. See, whenever in an office you are working, that office will never buy 2 pencils, 1 eraser, 1 sharpener, 1 scale. No, they buy that in bulk because nobody is going to run to the stationery shop again and again. So what they do is they buy 100 pencils, 100 erasers, okay, at one time, and they are kept in a godown. But tell me, at one time, are you going to be using 100 pencils? Answer is no. You may be using 2 or 3 or 4 pencils at a time. The remaining stock is kept for later use. The benefit you will be using over a period of years. So that stock which is kept aside of stationery becomes your asset. Okay. If you have spent money one time and you have completely used, for example, you purchased a pencil and it was used in that particular year, that is an expense which goes to profit and loss account. Printing and stationery, it will go under that head. But if there is a stock that you have purchased in bulk and kept aside, then that becomes your asset because it is going to be used for a longer period of time. Okay. So I told you this problem is important because of these small changes. Okay. Tell me, where will you write the next item? Trademark.
Asset.
Trademark is also an asset. So can you tell me what is the meaning of trademark?
A sign or logo, symbol,
yes.
basically.
Yes, excellent. Any sign or logo or any particular color used by a brand to identify itself separate from the others is known as a trademark. Or even a font, for example, a particular type of font makes a particular brand different from the others. You can identify it easily amongst all the products there. That sign, for example, if we talk about sporting goods, Nike, Adidas, okay, or Reebok or Puma, whatever those brands are, they particularly have a separate logo for all of those brands. You can identify easily which one is which. So that particular mark that you see on that product is known as a trademark. Is that benefit going to be received by you? Answer is yes, because people can identify that item, okay, and they are going to purchase your particular item over the others because that is their preference. That is a benefit received by you for a long period of time. The moment you come across such an item, that is known as an asset. So trademark is an asset. Okay, before we go further, can you tell me which type of assets are these patents and trademarks? Just general.
In,
Yes,
intangible assets.
they are known as intangible assets. See, when we talk about building, or we talk about furniture, or we talk about motor vehicle, those are all assets that you can touch and see. That is why they are known as tangible assets. But patents or trademarks, okay, are only ideas. You cannot see or physically touch them. That is why they are known as intangible assets. You cannot touch. Okay, let's go further. The next item, bills receivable.
Assets.
Asset. Then electricity charges.
Profit and loss.
Profit and loss.
Profit and loss account. Very good. What about wages?
Trading.
Trading account.
Heating and lighting.
Profit and loss account.
Okay, let me tell you, it goes to trading account, heating and lighting. See, when you require heat, it is generally for operating your machines, which is happening in the factory, in the manufacturing process. So that heating part or lighting is relating to the factory expenditure, which is why it will go to trading account. Then the next item, trade expenses.
Profit and
account.
loss.
Profit and loss account. Next, sales return.
Trading account.
Sales return is an item which will go to trading account, but it will be deducted from sales on the other side, on the credit balance side. So what you see sales there, you put a tick mark, sales return will be subtracted from there. Then next, land and building.
Asset.
Land and building is an asset. Furniture,
Asset.
asset. Cash at bank,
Asset.
investment.
Asset.
Investments are also assets. Drawings of the two partners. Remember, you will deduct drawings from capital. So what we will do is put a tick mark on capital, which is on the other side, on the credit balance side. You know that drawings have to be deducted from there. Next, bad debts.
Profit and loss.
Profit
loss.
and loss account. And finally, purchases.
Trading
Trading.
account.
Purchases goes to trading account. Okay, let's continue. Our debit balances are over. Now we move on to the credit balances side. Capital, we know the first item on the liability is capital, the owner's money. Continue. The next item, other loans. Where will you write?
Liabilities.
Liability side. Okay, new item, reserve fund. Understand what is the meaning of reserve fund. Whenever you are carrying on business, okay, partners have contributed money to the business in the form of capital. But all of that money may not be used. Some money may be kept aside as reserve, that this money is to be touched or to be used only in times of emergency. Okay, that amount kept aside is known as a reserve fund. Okay, which is also a liability. It is as good as the owner's money, but just kept in a separate box aside to be used in times of emergency. Emergency fund. Okay, reserve fund only in terms of that, or rather in times of emergency, when it is required is when you will use that fund. So it is kept aside, but again, it is continuing on the liability side along with the partner's money, which is capital. Then next, sundry creditors.
Liability.
Is a liability. Bills payable.
Liability.
Liability. What about purchase return?
Less on the trading side.
Yes, it is in trading account, but you will deduct it from the item of purchases. So on the debit balances side, wherever you see purchases, you put a tick mark there. We will reduce returns from there. Then the next item is RDD. Now the question is, this RDD, reserve for doubtful debts, which one is it? When we had a discussion earlier, we talked about new RDD and old RDD, which is new RDD for this year and old RDD which has been already made in the last year. Remember, the one that you see in the trial balance, which is given to you in this table, on the credit balance side is always old RDD, because the new RDD we are supposed to make that at the end of the year, which will be always given in the adjustments, that how much RDD has to be created for the current year. If it is already created and given to you, already calculated, the one that you see is always going to be the old RDD. So whenever you come across that item, best is in the bracket against RDD, you write old and keep, because you need to know what to do with new RDD and old RDD. So write old and leave it there. Then the next item, sales. Again, trading account, the first item on the credit side is sales. What about interest?
Profit and loss.
Interest you will write in profit and loss account on the credit side, which means this is interest, which is an income. Okay, interest received. Interest may be paid also, but that would have come on the debit side. This is interest in the credit balance, which is an income. We will write it in profit and loss account. Okay, trial balance is done. Now we move on to the adjustments. Point number 1, stock on 31st March 19 is valued at cost price 12,000 and market price 17,000. There are two values of closing stock. You know the adjustment. Only tell me which out of the two values you are going to pick up. Cost price 12,000 or market price 17,000.
Cost price.
Cost price 12,000.
The answer is 12,000 is the amount to be taken. See, don't look at whether you have to take cost price or market price. That is not important. Only look at the values and take always the one whichever is lower. The reason you are taking cost price or market price, out of the two, whichever is lower, because of the principle or concept of conservatism. Okay, do not write your assets more than what they are going to be received for in the future. If you know that your stock in the future is only going to receive 12,000, there is no use recording it at 17,000, which is why you always record the lower amount. Be conservative. Okay, that is the principle, and which is why we take it as lower of the two values. Okay, then the next, our customer Mr. Shekhar failed to pay his dues of rupees 800. You need to tell me what happened in this transaction. Firstly, you know that Mr. Shekhar is a customer. Another word for customer in accounts is debtor. He failed to pay his dues of 800. He was supposed to pay us 800. He has not paid us. What can you give me a term for a customer who does not pay you? What term will you use there?
Bad debts.
You will use the term bad debts. So this is an adjustment where we have to increase the value of bad debts that is already there, that you see in the trial balance. Do you see the second last item on the debit balance side, bad debts? Remember, put a tick mark on that, because those are going to increase. There is another customer, Mr. Shekhar, who has not paid his amount of 800. That is bad debts loss for us. Increase that. But when we increase bad debts, remember, debtors that you see somewhere on top, that value is going to reduce. Why? Because customer, that Mr. Shekhar, is not going to pay us 800. So reduce the value of debtors. Okay. So tick mark debtors and tick mark bad debts. We are going to reduce the value of debtors and increase our loss, that is bad debts. Then point number 3, 1/8 of the patents are to be written off. This adjustment, 1/8 of the patents are written off. The meaning of written off is nothing but depreciation. To write off means to reduce the value of your asset, but they do not use the word depreciation, because generally on intangible assets, see what I'm telling you, on intangible assets, whenever they want to provide depreciation, they don't use that word depreciation. They use the term writing off, but the meaning is exactly the same. Reducing the value of an asset, okay, is known as depreciation. Only thing is, when we talk about land, building, etc., those are tangible assets. On that we use the term depreciation. But if the same item is to be done for an intangible asset, then the word to be used is write off. So that point number 3 that you see is nothing but depreciation of which asset? Patents. So on top you go and tick mark patents, that asset we will depreciate. Okay, then further, point number 4, a part of furniture 5,000 rupees is purchased on 1st October 2018. Okay, there's a reason they are giving you this detail. Do you see furniture? The value is 13,000 in the trial balance. They are saying out of that 13,000, this year on 1st October, you have purchased 5,000 rupees worth of furniture. Why they have given you that information, you will come to know by reading the next point. Point number 5 says depreciate land and building at 10% and furniture by 5%. Those assets you have to provide depreciation, their value is reducing. So we are going to tick mark both those assets, land and building and furniture. Now the reason they have given you the date of purchase of furniture is because depreciation calculation is going to change for that particular asset, furniture. Again, something new. There are many new things in this question. Okay, depreciation. Again, there is a separate calculation. We are going to prepare a note on depreciation of furniture because they have given us a particular date on which that furniture has been purchased. For now, what you do is just put a tick mark on both those assets. Their value is reducing. Land and building and furniture. Then point number 6 is an adjustment you have been doing continuously, and that is outstanding expenses. There are two of them, wages and electricity charges. Both those expenses, put a tick mark. You very well know what is to be done with outstanding wages and electricity charges. Then further, the last adjustment says allow interest on capital at 3%. Okay, remember in the beginning of the class, before we took up full problems on final accounts, we had prepared capital account and current account. That time we had seen how to calculate interest on capital. They have already given you the rate 3%, and you already know what is the capital of the partners here. So very simple, you are going to take that capital, apply the rate and find out interest on capital. But the question is now, how do you record that in the account? So when we come across that point, you will see how those two effects are to be done. How do you record interest on capital? Remember, adjustment means you are going to be writing in two places, one debit and one credit. Only then that transaction will be complete. So a little big question. There are 7 adjustments here. Okay. But what we know, let's attack that first and get that correct. All the new things, how to write, in what place to write, how to do the calculation, all of that you are going to see. So now, before we begin, the first few things that are to be written is for who you are preparing these accounts and for which year you are preparing. That has to be written on top of our accounts. So here the partners are Archana and Prerna. Let's go and write that in our accounts. So on the top of your trading profit and loss account, write down the words in the books of Archana and Prerna. And read and tell me for which year end are you preparing this these accounts?
31st March 2019.
31st March 2019. That date you write on the trading P&L account as well as on the balance sheet. Balance sheet as on 31st March 2019. Some of the details, like I told you, you already can write and keep. For example, in the trading account, opening stock, purchases and sales, these 3 items, their position is never going to change. You can write that and keep. And in the balance sheet, the first item on the liability side is capital. That also we can write and keep. The first partner is Archana. Leave about 4 lines. And then write the next partner, Prerna. And then again leave 4 lines. Okay, now we are ready to solve the question. What you're going to do is take the trial balance and in that same order, pick up those items. You already know where to write them. If it has a tick mark, which means it has an adjustment, you're going to write it in the inner column. So let's begin. The first item says stock on the first date of the year, which is opening stock, which will be written in trading account. Write down. The words are written there to opening stock. Amount is 8,560. Then Next is patents, that is an asset. Come to the balance sheet asset side, write down patents. But in the inner column, we have put a tick mark there. Amount is 2000. Leave one line there. Then next is sundry debtors, also an asset. Continue. Write down debtors. Inner column 18,500. And there is one adjustment on debtors, so leave one line below that. Then stock of stationery, also an asset. As it is, write down stock of stationery. $3,000. Then for the trademark, another asset. Here there is no adjustment, so you write in the outer column 2000. Then next, bills receivable. Continue on the asset side. $6,300. Next, electricity charges, that will be in profit and loss account. So below the trading total line, right there, to electricity charges, has a tick mark, you write in the inner column. Amount is 1,450. Next, wages, that goes to trading account. Below purchases, remember to leave a line, there are returns, and then write to wages. Again in the inner column, amount is 950. Wages has an adjustment. Then next is heating and lighting, also in trading account. To heating and lighting. Amount is 1,000. Next, trade expenses, that is in profit and loss account. To trade expenses, 850. Then the next item, sales return. We need to deduct it from sales. It is an item that you see on the debit balance side, but we are taking it to the credit. We can do that provided we change the sign. So minus, write on sales return or only the word returns. And that is 400. Then after trade expenses and sales return, the next is land and building. Come to the asset side. Right, land and building in the inner column. That is 22,000. Next, furniture, also an asset. This also has an adjustment, so inner column, furniture is 13,000. Next, cash at bank. Continue on the asset side. Cash at bank is 5,000. Then next is investments, also an asset. $7,500. Next is drawings, and that is exactly opposite of capital. Capital is money being brought into the business by the owners. Drawings is money taken away from the business by the owners. So below their capitals, next to their names, will come their capitals. On the next line, you write down minus drawings. So for Archana, have a look. Drawings are 1,200. And for the next partner, Prerna, there also write minus drawings. Amount is 900. Then next is bad debts. It is a loss. You come to profit and loss account on the debit side, write down 2 bad debts. Right in the inner column, amount of bad debts is 200. And below that, what you do is leave 2 lines. There are 2 items to be written below that. What is to be written? We will come to that a little later. Bad debts 200 and leave 2 lines below that. And then the next is purchases, which goes in trading account. We already written the word purchases right in the inner column. Amount is 23,700. Okay, debit balances are over. Now we move to the credit balances. So the first item there is capital of the 2 partners. Come to the liability side. We have written the names there. So write down for Archana, capital is 40,000. And for Prerna, capital 20,000. In line with their names, you write down their capitals. Then, after capital, next is other loans. That is a liability. So remember, below Prerna, leave about 4 lines there and then write other loans. That is 3,000. Reserve fund, also money kept aside, but it is the partner's money. So just like how you have written capital, a separate item there, reserve fund, amount is 1,000. Next, sundry creditors. Continue on the liability side, creditors, 17,500. Below that, bills payable. Amount is 5,000. Then the next item is purchase return, which we will deduct from purchases in trading account. So come to the trading account debit side. Remember, you're picking an item from the credit balance side and writing it on the debit. So it has to change its sign. You write down minus purchase return or just the word returns. That is 1,000. Okay, so deduct and tell me the net purchases in the outer column.
22,700.
22,700. Then the next item is RDD, and this is the old RDD. Remember, this is another item which you are going to pick up from the credit and write it on the debit along with bad debts. Okay, so you have already written bad debts in the inner column. There you write below that minus, specifically write there old RDD. That is 500. An item from the credit has come to the debit because we have changed the sign there, minus old RDD. The reason we are deducting it because this is no longer required. This was an old one. Remove it. Then the next one is sales. That is the first item in trading account on the credit side. Write down the word sales, 30,200 in the inner column. And what you can do is deduct and find out how much is the net sales in the outer column.
29,800.
That's correct, 29,800. And then the last item there, interest, which is an income, will go to profit and loss account. On the credit side, the first item, remember, is always gross profit, which comes from trading account. You leave that line or write the word gross profit, and then below that, write down by interest. Amount of interest, 310. Okay, at this point, our trial balance is complete. We have picked up the items and written it here in our solution. Now, when we move to the adjustments, remember, all of those transactions you are going to write in two places. So let's take the first one, and that is closing stock. Closing stock here, they have given us two prices. We have decided to take the lower one, and that is 12,000. The two effects, just like in the trading account, on the debit side, you have written opening stock. On the opposite side, you will write closing stock. So last item on the credit, write down by closing stock. The lower amount is 12,000. In trading account, remember, below sales, always leave about 2 to 3 lines because there could be some items there, and then write the last item as closing stock. That is 12,000. One effect here. And second effect, closing stock is our asset. It will be sold in the future years and money will be received for it in the future years, which is why closing stock is an asset. Amount is 12,000. Then the next, our customer Mr. Shekhar failed to pay his dues of 800. We know that these are bad debts. Whenever a customer does not pay us, it is our loss known as bad debts. We need to adjust that figure in our accounts. Our customer's balance is on the asset side, written as debtors. That value is no longer going to be the same. There is one customer who is not paying us, so reduce the value of your debtor. Right there, less bad debts. And Mr. Shekhar, who is not going to pay us, that amount is going to be 800. So what you do is deduct 800 from debtors and tell me the net value of debtors in the outer column. Anybody?
17,700.
17,700, that's correct. So see, debtors value has reduced because one of the customers did not pay us. That is our loss, bad debts. The second effect, you are going to record that loss on the debit side of profit and loss account. You have already written once bad debts. So let's go there and record these new bad debts, some more bad debts. So write there plus, write down new bad debts. That was 800. Okay. Now these three figures, you can do the operation and take it to the outer column. But be careful, one of them is minus. There are two items which you add, but old RDD is going to be subtracted. So do that and tell me the value in the outer column.
500.
500.
500.
500, that's right. The two bad debts together is 1,000. Old RED, which will be minus 500. Net figure in the outer column is 500. Good. Adjustment relating to bad debts, 2 effects are done. We move on to the next adjustment. Read point number 3. It says 1/8 of the patents are to be written off. I told you writing off is nothing but depreciation. So your asset value is going to reduce. They are talking about patents. You come to the asset side, the first item that we have written, patents. Below that, write minus. Write the word written off. Instead of writing the word depreciation, you write the word minus written off. Even if you use the word depreciation, it won't be wrong. But the correct word to be used for intangible assets is to write off that particular asset. So less written off, and they have told us how much to write off. 1/8. So let us do the calculation. The value is 2000, and 1/8 of that means divide by 8 or multiply by 1/8. Do that and tell me how much is the depreciation value.
250.
250.
250. So this much amount is to be written off, to be reduced. So let's reduce then from 2000, right there, minus written off 250. Deduct and tell me the value of patents in the outer column.
1750.
1750. That's correct. This is one effect. We have reduced the value, but second effect is going to be just like depreciation. When you reduce the asset, that is our loss, it has to go to profit and loss account. Here also we have reduced the value of patents. Second effect will come to profit and loss account, debit side. Here also, instead of writing the word depreciation, we will write 2 patents written off. And that was 250. Remember, even if you use the word depreciation, there is no problem at all. It is the same as depreciation, reducing the value of the asset. Okay, 2 effects are done here. Patents written off. Then we move on to the next. Point number 4 says, a part of the furniture 5000 is purchased on 1st October 18. By itself, it is not an adjustment. So leave point number 4 for now. It will be useful when we calculate depreciation later on furniture. So leave that point number 4 and we move on to point number 5. Depreciation on land and building at 10%. So let's provide depreciation there. Same thing what you did just now for patents. Now you are doing for land and building. This time we will use the word depreciation. So below land and building, right, minus depreciation. And they have told us the rate of depreciation is 10%. Can you tell me how much is 10% of 22,000?
2200.
2200, 2200. I told you 10% means 10 less. Okay, 2200. Deduct and tell me the value of land and building in the outer column.
19,800.
19,800. Good. This is one effect. Land and building has been depreciated. Second effect of depreciation. Let's go to profit and loss account on the debit side. Right there. To depreciation. Okay, one below the other we'll write. The first asset that we have depreciated is land and building. In the inner column you write now. Amount was 2,200. Leave a line there because furniture also depreciation has to come there, which we will record after calculation. Okay, now the important calculation for depreciation of furniture. Very, very important. Okay, I'm going to first explain the calculation to you. You later on take it down. Okay, so let's calculate depreciation on furniture. I'm going to prepare a separate note. You are also going to do the same. In the exam, of course, you can skip the note and directly do the calculation. But for now, for understanding, you need to have this calculation, depreciation on furniture. Okay. Now what I want you to do is tell me on the asset side, can you tell me the total value of furniture that you have recorded?
13,000.
13,000.
13,000. This is the value of furniture. But remember, this full furniture is not what was there at the beginning of the year. Some of this furniture you have purchased in this year. They have given it to you in point number 4. What point number 4 says, a part of the furniture. So let's make a part of this furniture. 13,000 has 2 parts. A part of the furniture is purchased on 1st October 2018, which is the current financial year, current accounting year. In that year, you have purchased 5,000 worth of furniture. So that part is new, purchased this year. How much is new? 5,000. Which means how much is old? Which was the old part which was continuing year after year? The remaining part from 13,000, if you deduct the new value, 5,000, how much was the old furniture already available with you?
8,000.
8,000. Okay. Now, why are we separating the value as old and new? The reason is depreciation, whenever we provide, it is to be provided for the period of time for which that asset is used. If you have not used that asset, can you provide depreciation? No, because depreciation is provided because the value of asset is reducing because of continuous usage. This new part of furniture, 5,000, was not there in the beginning of the year. It has been purchased somewhere in the middle of the year. So you will start charging depreciation or calculating depreciation from the day you purchased till the end of the year, because that was your period of usage, which is why we need to separate, because depreciation now has to be calculated separately on the old part and separately on the new part. How do you do it? Pay attention now. The rate of depreciation is given to you. Can you read and tell me in point number 5, how much is the rate of depreciation on furniture?
5%.
It is 5%. So remember now, when you calculate depreciation, do it twice. One for the old part, you will take for full year. Why? Because it is old furniture. It may have been purchased 2 years, 5 years, 20 years ago. But for 1 year, when you want to calculate depreciation, you multiply by 5%. So take 8,000 into 5%. How much is that value?
400.
Amount is 400. Okay. That is the depreciation on old furniture. Done. But the new furniture, they are telling us that it was purchased on 1st October 2018. 1st October 2018 till the end of this year, which we are preparing the accounts, that is on 31st March 2019. Can you tell me how much is this period? How many months?
6 months.
The correct answer is 6 months. Are you going to take the month of October? Answer is yes. It is 1st October. So full month of October has to pass. Then will come November, December, Jan, Feb, and you will take full of March because it is 31st March. That full month is over. So if you count and see, you have used the new furniture for a period of 6 months. So can you charge depreciation for full year? Answer is no. If you have used the furniture only for 6 months, then you will provide depreciation also for a period only of 6 months. So when you multiply, you will multiply by 5%, but do not forget also multiply by 6 upon 12 to get the correct value of depreciation only for 6 months. So do this calculation, 5,000 into 5%, so 5 upon 100 for 6 months into 6 upon 12. How much does that come to?
125.
125. Okay. This is depreciation on the new part of the furniture, 125. Is that correct? Is everybody doing their calculation? Is it 125?
Yes, sir.
Okay.
Yes, sir.
Now you can calculate the total value of depreciation on your entire furniture. It is 400 on the old part plus 125 on the new part, your total depreciation. Add up and tell me how much it is. 400 plus 125.
525.
525 is the correct amount of depreciation to be calculated. or we have done the calculation. What you do now is, if you have not taken it down, you also copy down this calculation. Important, because you cannot calculate directly 5% on the total value of furniture, that is 13,000. Your answer would have been wrong. If I calculate directly 5% of this, can you tell me 13,000 into 5% if anybody can calculate quickly?
600.
Not
650.
650. So is our depreciation 650? Answer is no. Our correct depreciation is 525. You cannot take on the total because that furniture has two parts. One which is used for the entire year, that is the old furniture, calculate for the full year. And one which is used only for half the year, then depreciation also will be calculated only at half the rate. So we multiply into 6 upon 12. Important. Whenever they give you the date of the asset, you will separate that asset as old and new and accordingly calculate depreciation. So take this working down and your correct amount of depreciation is 525. Okay, as you are taking down, if anybody has a doubt regarding this adjustment or this calculation, you can ask me now. Have a look. Has everybody taken this down?
Yes, sir.
Yes, sir.
Okay, let's go ahead. Remember, 525 is the depreciation that we have to reduce from the value of furniture. Let's go to the asset side. Below furniture, write down less depreciation. Amount is 525. Deduct and tell me the correct value of furniture in the outer column.
12,470.
12,475. Is that correct?
Yes, sir.
Yes, sir.
Okay, this is one effect. Reduce the value of furniture. Second, depreciation goes to profit and loss account on the debit side. We have already written depreciation for land and building. Below that, write down furniture, 525. Then add up and tell me the total depreciation on both these assets.
2,725.
2,725. That's right. Done. Adjustment on depreciation for both the assets is complete. And remember, out of that, furniture was an important calculation. You mark that as important. Okay, let's go further. Point number 6, the regular adjustment. Outstanding. Okay, there are two of the expenses which are outstanding, which means they have not yet been paid. If they have not yet been paid, which means they have been recorded less. Recording less is incorrect. You add and record the correct amount. So out of that, the first one, they're talking about wages. So come to trading account. We have written wages in the inner column. Write down plus outstanding. Amount is 300. Add 300 and tell me total wages in the outer column.
1,250.
1,250. Same thing for one more expenditure, and that is electricity charges. That is in profit and loss account. There also write plus outstanding. Amount is 200. Add up, and how much is electricity in the outer column?
1,650.
1,650. This is only one effect. Second effect of outstanding expense, where do we write?
Liabilities.
Liabilities.
On the liability side, the reason is we have not yet paid this expenditure. It is going to be paid in the future. When money is going to go out in the future, it is a liability. Write down outstanding. We will write it together. So write the word outstanding expenses. And below that, first is wages. Inner column 300. And below that, electricity charges. That was 200. When you add up, total outstanding expense 500 in the outer column. The last adjustment, point number 7, is allow interest on capital at the rate of 3%. Now, interest on capital, first understand what that item is. What you see on the liability side, the two partners have given money to the business. Okay, that is in the form of their capital, 40,000 and 20,000 they have given to the business. But remember, it is just like any other loan. Okay, whenever we take a loan as a business from somebody else, periodically we are supposed to pay interest. And here also the same thing you are doing. You are paying interest to the partners for providing their capital to the business. So for the business, it is an expenditure, but for the owners, it is an income because they have provided money and periodically they are taking interest from the business. So when they take away interest, for them, it becomes an income. And whenever it is their income, their capital will increase. So one effect what we are going to do is increase their capital by the income, and that is interest on capital. And the second effect is going to be, it is an expenditure for the business, so it will come in profit and loss account on the debit side. So let's do one effect at a time. First is come to the capitals and there write down plus. The reason it is plus is because it is an income of the partners. Whenever the partners' wealth is increasing, you will increase their capital. So write there plus interest on capital. If it does not fit in one line, make sure that you write the full word. Take 2 lines, but write the full interest on capital. And now we will calculate at the rate of 3%. You are calculating it on capital. So take 40,000 and multiply it with 3%. So into 3 upon 100. How much does that come to?
1,200.
1,200. Continue writing in the inner column. All adjustments to capital, at the end, we will take it to the outer column. So on 40,000, 3% is 1,200. Same thing for the next partner. Prerna, her capital is 20,000. You are going to give interest to the partner. So add plus interest on capital. Let's calculate on 20,000, the same rate, 3%. How much is that?
600.
600. So add 600 there. This is one effect. I told you it is an income for the partners, so we have given it to them and added their capital. Second effect, for the business, it is an expenditure. Okay, you are going to have to pay that interest to the partners, so money is going to go out. It is an expenditure. So where do you record expenditures? You record it on the profit and loss account debit side. All expenses recorded there. One more expenditure here. You write down 2, interest on capital. And one below the other, we have to write separately for the two partners. The first partner, Archana, amount was 1,200. And the next partner, Prerna, amount is 600. Add up and you will see that 1,800 is the total. This amount of 1,800 has been paid by the business to the two partners. It is an expenditure. So it comes on the profit and loss account debit side, interest on capital. Same way in some other question, if there is interest on loan, you will just replace the word capital with the word loan, interest on loan. That also is expenditure for the business. But whom do you pay it to? You pay it to the bank. Here you are paying it to the partners. Okay, here also now 2 effects are done. And that's it. That was the last adjustment there. So all adjustments complete. Now time to close our accounts, starting with the first one, and that is the trading account. Procedure as usual, you will add up and see which side is greater. Is it the debit or the credit side? Okay, slowly now, carefully, what you do is add up both sides and tell me the total.
$41,800.
So which side?
Credit.
41,800. Okay. It seems like the credit side only is greater. So I will write it there, 41,800. Same total on the debit, 41,800. Debit side total, add up those four figures.
33,510.
33,510. The others also, please keep checking. Are you getting the same result? Debit
Yes,
side
sir.
total. Okay, 33,510. Since the debit side is lesser, we will have to put an amount there, which is known as gross profit. So write down to gross profit carried down. And to find that amount, you subtract the debit side from the credit side, and you will have that amount. How much is that?
8,290.
8,290.
Yes, sir.
So that is your gross profit, 8,290. Credit minus debit. That gross profit, you will take it to the profit and loss account. There, right, by gross profit brought down, 8,290. Then repeat the process to close profit and loss account now. Add up and check which side is greater. Here also,
Credit one.
it seems that the credit side is greater. How much is the total?
8,600.
8,600. Add up and also tell me how much is the debit side.
7,775.
Debit side you said was 7,775. If you subtract, you will find out how much is the net profit.
825.
825. Please check, is everybody getting the same result?
Yes, sir.
So net profit, you will write on the debit side. Debit side was less. There you write to net profit. And remember, it has to be distributed to the two partners, Archana and Prerna. Now to find that out, we need to split this net profit between the two partners, Archana and Prerna, in the profit sharing ratio. Is it being given to you in this question?
Yes, sir. 2:1.
In the first line, they have mentioned profit sharing ratio is 2:1. So take the total net profit, divide by 2 plus 1, that is totally 3. How much do you get?
275.
275.
275. Now take that 275 and multiply it with 2 and multiply it with 1.
550.
550.
550 and 275. Is that the breakup?
Yes, sir.
So write that in the inner column first. For Archana, 550. For Prerna, 275. Add up, and the total net profit that we had calculated was 825. Okay. Net profit has to be added to the capital. Again, the owner's wealth is increasing because of profit. Second effect of this net profit, we will take it to the capital accounts on the liability side. Right down there. The last adjustment to capital, right, plus net profit. 550 for Archana. And for Prerna plus net profit 275. Now time to find out the total capital in the outer column. Remember, one of the items is to be subtracted there, drawings. Okay, to avoid confusion, I will put that figure in the bracket. Remember, in accounts, when that figure is in the bracket means you have to subtract. So 3 figures add, 1 figure subtract, and tell me the capital of Archana in the outer column.
40,550.
That's correct, 40,550. What about Prerna?
19,975.
19,975. Please check everyone. Are you getting the same capitals? Okay, as everybody's checking, I will ask you one question, something that we have studied in the past. If you can answer, very good. Tell me, by which method have we maintained the capital accounts here? There are 2 methods for maintaining capital. Which method have we used here?
Fixed.
Okay, 2 answers I got, fixed and fluctuating. What is your answer?
Fluctuating.
It is as per the fluctuating capital method. Do you see that in the beginning, capital was 40 and it has become 40,550. Same for the other partner. 20,000 has become 19,975. Capitals are changing, they are fluctuating, which means this is prepared as per the fluctuating capital method. Very soon, we will come across a question where we will be using in final accounts, in all of this preparation, using fixed capital method, wherein you will see that capitals have remained the same, but in place of all of these adjustments to accommodate all of that, we open current accounts. So you will also see current account balances there. How to do that? Of course, we will come to that little later. But just for general knowledge, I asked you that in this question, we have prepared it as per the fluctuating capital method. Okay, now the last step to check whether the balance sheet tallies, add up the liabilities and the assets and tell me what is the total.
$87,525.
87,525. Have you checked the total on both sides?
Yes, sir.
And it tallies 87,525. Please check everyone. Are you getting the same answer?
Yes, sir.
Good. 87,525.